So you recognize that the sources of employment and growth have changed. You recognize that the housing market is frozen. You recognize that there are debt overhangs in the system, and you put together not a piecemeal approach. We've had a piecemeal approach. You put together a comprehensive approach to deal with these issues.
We welcome all worldwide from Bloomberg Television as we speak with Mohamed El-Erian. Mohamed, John Taylor pushing forward Ron McKinnon of Stanford's idea of a Beijing Consensus. This off, of course, Williamson's classic Washington Consensus. If we end up 10 and 20 years out with a Beijing Consensus, what does America need to do to project to that Beijing Consensus if the real goal is to build American jobs?
Yeah, a lot depends on how you define a Beijing Consensus. So if you take the positive side of what China has done, you would come down to the following. It has taken a long-term view of its development. So it has decided where it wants to be in 5 to 10 years and kept always a vision. Secondly, it is open to mid-course corrections. So when the economy is not responding the way that they expect, rather than simply do more of the same, what we call active inertia, there's a more thoughtful process of saying, what should we do differently? Having said that, there's a third element of the Beijing Consensus that one has to be careful about, which is replacing market signals with direct controls. That would not be a very good idea.
When you sort through this, and to bring it back to our listeners and viewers in America, the idea of a Friday's jobs report, which is presumed to be a step backward, what is the prescription for the administration? If they're finding a new playbook now, do they need to wait till after the election, or is now for the president?
You know, many of us would say now, because there's nothing you can do that acts quickly. It takes time to implement structural policies.
Couldn't they put through a Social Security tax waiver for employers and employees, and about what, Ken? A cup of coffee?
They could, but the immediate reaction will be, well, what about the deficit? So it's important to have a comprehensive program as opposed to these piecemeal measures. They've done a lot in terms of piecemeal measures, yet the outcome has been disappointing because the market sees it as an ad hoc and piecemeal approach. What is needed is a package of policies that are self-reinforcing rather than just policy after policy. And you see this also in Japan. Look at how disappointed the market is this morning after getting all excited about a policy announcement. So it's important to recognize that you need to address several issues at the same time.
One of our top stories this morning has to do with the way investment-grade corporate bonds have been outperforming junk. In other words, people are playing it safe. Is that what you're doing at Pimco?
Yes. A while ago now, we went up the quality spectrum, if you like, earning for our clients good carry, good interest income, if you like, but at the same time recognizing that the economy remains fragile, that growth would be slowing down. And therefore, we've gone up the quality spectrum, and that's completely consistent with the investment grade versus high yield.